Hello, fellow traders. So it's Tuesday, the 28th of June, and the market is getting mauled. We gapped up, looked like we were going to continue the rally, but now the Nasdaq is down almost 3%. The S&P is down 2%. Really ugly day. You can see here on the chart. Nasty, ugly. The good news is that so the S&P for the month is down about 4.6%. The Qs, which represents the Nasdaq 100, is down about 4.3%, and the small cap Russell IWM is the ETF, down about 4.4% for the month. So it's a brutal month. We're hanging tough though. You can see here that we got $59,000 worth of profits this month on $625,000 that we put at risk. So, we made about 9.6% return on the money that we put at risk. So, I'm okay. That said, the portfolio position, because we've been taking so much profit to the downside, my upward bias in the portfolio is 71%. So it's not really great right now when the market is down. So I'm taking a little bit of a hit. So July might be challenging. I think June is in the bag. I think we're okay. July, I think we're going to have a little bit of work to do. But let's go over some trades and see where we're at. This is Carvana. I had put this bull called vertical, and it was a bad call. It looked like it was breaking above its 20-day, but it's clearly in a downtrend. This chart that I'm looking at right here is disgusting. And to go long this, I don't know what I was thinking. So so the stock is down about 16% today. I got out of the way. This is just a really foolish call on my part. So the CVNA Carvana on the 27th of June, which was yesterday, we had put this bull call vertical on. We had sold the July 8th $33 strike price for $1.49. We had bought the July 8th $30 strike price calls for $269. I'm sorry, and it's down. I lost 70% on the trade. It's just a really stupid trade. Here's U.S. Bancorp. So this thing is. It seems like it's going to have a downward move, but I put a straddle on this just in case that this market does try to continue its rally into July. So I put a straddle on USB, thinking it's going to go above or below. Our numbers here are $50.20 and $44.80 to the upside and downside. So I just need this thing to be volatile, right? So we put on the July 15th puts, $47.50. We bought them for $1.75. We also bought the calls, July 15th, $47.50 strike for 95 cents. Let's get some volatility into USB, U.S. Bancorp. I'd like to spend a moment talking about Caterpillar. So Caterpillar, I did an iron condor today, and I did it for this Friday, so it's going to expire soon. And if take a look at this chart. So this is the implied volatility over the past year for Caterpillar, and it is up. It was above 2 standard deviations from the norm. So there was a lot of premium in those contracts. So I went ahead, I did this iron condor, expecting to collect the premium to the upside and downside, assuming that the stock stays within this range, this green range, which is $200.32 and $179.68. So if it stays in this green zone by this Friday, I'll be able to collect this premium. And again, the implied volatility was really high for this stock, so I went ahead and I'm going to try to collect. So with the iron condor, I had sold the July 1st puts, $180 strike price for 22 cents. I had went ahead and I bought the July 1st puts, 175 strike price for 14. I sold the $200 calls, the July 1st expiration $200 calls for 39 cents, and I went ahead and I bought the July 1st 205 calls for 15 cents. So in the end, if this company stays in that range, I'll be able to collect the premium on both sides. And that's about a 624% annualized return for 4 days worth of work. I don't know. I think we'll be okay with this. Here's AT&T. I did a straddle, so this thing, I mean, it looks like it's getting weaker, but it is above its moving average. The 20 is above the 50. It is above its 20-day moving average, so this could go either way. I went with a straddle here. So you can see today I bought the July 22nd puts. This is the $21 strike price for 96 cents, and I went ahead and I bought the July 22nd calls, $21 strike price for 36 cents. Trying to make that spread in between. I don't know, but I'm certainly on the lookout to get some downside exposure into the portfolio. All right, that's all I got today. Stay tuned.